Anxiety, worry, fear, angst, apprehension, concern, disquiet, doubt, dread, jitters, misery, misgiving, mistrust, nervousness, panic, restlessness, suffering, suspense, trouble, and uncertainty. If these words describe how you feel when you initiate a trade, then you need to stick around and watch this video. If you don't know the reasons why we worry and have anxiety when trading, then you're always going to be ruled by your emotions. But don't despair, there are things that you can do that will help reduce or eliminate that angst and apprehension so that you can relax and you can be calm when you make a trade. I'm going to share with you my top 5 tips for reducing or eliminating trading stress. Let's break it down together after this. Hi everyone, Dan here from thejoyfultrader.com, where I encourage you to learn how to take control of your own savings and investments by learning about trading. Even if you're totally brand new to trading and investing, young or old, you're always just the right age to start to learn how to secure a good future in retirement. In this channel, I talk about all kinds of things related to the basics of trading and investing for beginners. We keep it positive, we keep it upbeat, and as simple as possible. If you're brand new here and you want to learn more about the basic concepts of trading, then you'll definitely want to subscribe to this channel and like this video if you find it helpful for you. You can also catch me over here on social media. And so with that said, let's talk about why it is we worry, along with my 5 things that you can do to remove that worry and anxiety from your trading and investing. So why do we worry to begin with? Well, to start, I want to spend just a moment and talk about why it is we seem to worry about stuff anyway. Because understanding the why first gives us a foundation for knowing the how in order to problem solve. It's hard to completely be removed from any worry and concern from our everyday lives, and it seems to be a natural part of being a human being. You know, the condition of fearing about what could potentially go wrong in any situation. I mean, we all experience it, whether it be we're worried for the safety of our children and loved ones, we're worried about how we're perceived by our peers, will I be successful in life, will I get my homework done, will I get that job promotion, or will I get that job that I applied for? And worry on its own to a small degree isn't really a big problem. But one of the biggest things we all seem to worry about universally surrounds the topic of money and income. And as new traders and investors seeking to learn more about this subject, this is where it is the most pertinent. The subject of money provokes more worry and anxiety than just about anything else that I talk to people about. And I'll admit that I'm not immune from it either. I mean, so I don't want to give you a false impression that I have Spock-like control of my emotions. But as it relates to trading and investing, when I first started to learn how to trade in the financial markets years ago, I was confronted with fear and anxiety like I had never experienced before. It was a new revelation about myself that it both scared me and made me wonder if I could really handle it. Maybe you can relate to this too. Early on, advice I got from one of the many people that helped me to learn about trading, he said that fear and worry are the things that most hinder us from the goals that we desire. I mean, the technical aspect of trading is pretty easy, actually. It's controlling the psychological and the mental part that's the true challenge and barrier. And he was right, especially for me. There's a great article published in Psychology Today that was written by Dr. Seth Gillihan that talks about some of the reasons why we worry. For example, I'll be safer if I worry. It's kind of a superstitious element that tricks us into thinking that if we worry about something, then it's much less likely to happen. And another one is this: if I worry, I'll never have a bad surprise. Again, it's a mental trick that lures us into believing that the process of worry somehow prevents disappointments. And yet another one is this: worry helps me to stay motivated and solve problems. Well, this may be somewhat true. However, extreme worry is more likely to be paralyzing and inhibit productivity. Anyway, his article is really interesting, and so I'm including a link to it down below in the comments or the description here for you to check out. I highly recommend you go and read up on that. Okay, 5 things that you can do to help reduce or eliminate worry when trading. And first of all, I just want to say that I don't think that this is a comprehensive list by any means, but I chose these talking points because I found them to be the most relevant to me as I began learning about trading. I've talked to many other traders, both online and in person over the years, and also friends of mine who are traders. And this list seems to contain a lot of the most common issues that I keep hearing about. The first problem is this: you are trading or risking too much money. We all have our reasons for wanting to learn how to trade and invest. Perhaps your reason is the promise of making millions overnight from some trading guru who's wanting to sell you his flawless system. Or maybe you just want to quit that job that you don't like in order to work at home full time. Or maybe, and more realistically, you should be wanting to slowly grow a retirement account for yourself. In any event, though, it's my opinion that one of the main causes of stress and worry when you're trading is that you're sinking way too much money into an account that you can't afford to lose. And you're doing so with the hopes maybe that the more money you start trading with, you might yield bigger dividends quicker. But when you do this, you're really just putting too much stress upon yourself to be successful with each trade, having to be a winner all the time. Sooner or later, you're going to reach a breaking point mentally and financially. You need to listen to your gut on this. If each time you enter a trade and your stomach clenches up as you watch that return on the trade fluctuate up and down during the day, well, that's a clear indicator that you're really risking too much money beyond your comfort zone. So, what's the answer? Decrease the size of your trading account to a level that if you were to lose it all, it wouldn't impact your daily life. You should be trading with an account small enough that you could replace it all if it went away. Now, I'm not here to talk about what those amounts need to specifically be, because that's going to vary for each and every one of us depending on what we all want to learn to trade. Some of you might want to learn to trade stocks and day trade stocks and short them. You're going to need a certain amount. But on the other hand, you can get started trading things like foreign exchange currency pairs pretty easily with a small account of just a few $100s just for the practice. In any case, I would recommend to not risk more than 1% of that total account on any given trade. Imagine, if you will, that you were trading an account that only had $100 in it, and the most you could possibly lose on a single trade is a $1 bill. That shouldn't really cause you too much anxiety at that level. After all, it's only $1. You need to trade an account level like that, which will cause you to barely notice if you had a loss. Again, I don't know what that amount is going to be for you, as we're all in different places in our lives. The impact of having a typical loss in your trading account should feel the same if you're buying a cup of coffee or something like that. If you fear losing money, then your account and your risk are just too big. You need to dial it back down until it really doesn't matter to you as much. Focus on skill, not on the size of your returns. Take the pressure off yourself and trade with a small account and small risk. Focus on learning the skills about how to trade well and invest well at a small level. If you get good at doing that part right, you can always scale up those skills larger and larger as your account grows, and your returns will scale up, relatively speaking. All right, second problem, you don't have a concrete trading plan in place. You may have heard talk about having a trading plan before, but if you haven't, then I can't underscore the importance of having a trading plan in place before you begin to risk a single penny doing anything. When a construction contractor or a builder sets out to build a house or a bridge, they never do it on the fly and make it up as they go and just see what they end up with. Everything is pre-planned out from the smallest detail. Construction materials are chosen with the design, and those are all based on knowing what the stresses of the project are going to be, the weight and the loads and so forth. To the greatest degree possible, everything is already known and planned out and tested before the ground is even broken. Trading and investing are really the same way. Even though we don't know exactly what the outcome of any investment might potentially be, we are going into it first by outlining our strategy in advance. We should know what instruments we want to trade, what markets we want to trade. We should know why we're putting that trade on in the first place. What are the rules and the clear explanations about it? Even more importantly, we should know exactly what we're going to do after we open that trade. We should always have a plan for what we're going to do when we take a profit and what we're going to do when we take a loss. All aspects of the why, what, when, and how should all be known in advance. I mean, if you do this thoroughly for each and every trade, then you're effectively removing the concept of worry as a means to prevent any bad surprises. This is because there are no surprises because your plan dictates the outcomes in advance. You know when profits are going to be taken, and you know why. You know when losses are going to be taken and how much. A well-written plan removes the element of surprise, and it explains what's going to happen in all of the various contingencies. It's like saying, I know that I will either make $1.50 or I'm going to lose $1. Those are my two choices, and I'm accepting of both of them. I'm fine with either outcome. Now, the worry and the pressure are off because you've eliminated the unknowns about how much you'll make or lose. So create a trading plan today. If you don't have a trading plan written down that describes in detail how you're going to invest or trade, then you need to stop all of your trading activities now until you have this plan in place. In this video, I'm not really going to go into the details of such a plan, but I am making another video which is strictly devoted to that process. Hit the bell notification down below so that you can be notified when that video drops. But I will say that you need to specify what goals for the plan are. You need to define what the returns or losses are going to be that you accept. You're going to choose how much money you're going to be comfortable trading with, what markets you want to trade, stocks or futures or whatever. And you need to decide when you open a trade, what are your criteria for closing that trade. Then you want to journal in a diary about your thoughts for each trade so that you can reflect on those at another time after you've had a chance to sleep on it. So there's a couple of really great books on the subject that I've read and I continue to reread, and I highly recommend them. As usual, I've included links to them down below in my description. I highly recommend you go down and you check those out. Stress problem number 3. You're trading without a tested system. Like my example of a construction company that builds a house or a bridge without any plans that have been mathematically tested in advance, if you're starting to trade and invest without really knowing why you are buying or selling, then it's like building that bridge without knowing if the materials or the structural design will even hold the weight without collapsing. You need to know in advance why you're doing what you're doing before you do it. If you're opening a trade because you're going on some gut instinct that tells you that it seems the market is going up, and then you take a profit or a loss because your gut seems to tell you that now's the time or whatever, then you might as well be flipping a coin for every decision that you're making. And when you play it like that, your results can't possibly be sustainable, and more importantly, they can't be repeatable. You'll have no idea that what you're doing has any statistical probability of success over time. Do you think that casinos just wing it and hope for the best? Of course not. They have mathematicians and analysts who carefully evaluate what their statistical probabilities of success are from day to day, month to month, and year to year. I mean, they know in advance what their odds of success are going to be. Now, I'm not saying that knowing the statistical odds of success equals a guaranteed success. But let me ask you this. Would you rather enter a trade of some stock knowing in advance that you have a 75% chance of making a profit? Or would you rather just trade the stock because you have a gut instinct and you're just going to hope for the best? Which of these two examples do you think is more likely to cause you anxiety about that trade? The point here is that if you don't define the reasons and the conditions as to why you are going to trade something, and then you neglect to test them to see if they're actually statistically valid, you might as well be driving a car blindfolded and just hoping that you don't hit an obstacle. You need to be defining your rules and your guidelines for your investments, which can then be analyzed through backtesting and probability analysis. Once you know that if you theoretically do the same thing over and over, and that you have a certain known probability of success, you can begin to relax, and it takes the stress off your mind. Statistical backtesting, a systematic approach to trading, will give you the peace of mind to know that over time, the likelihood of success can be achievable. So the solution? Use software to help backtest and analyze your ideas. There's currently a variety of methods and tools available that'll help you take your trading ideas and apply them to historical data for testing. But this is only the first step to start testing whether or not your ideas are rational and viable. The concept of analyzing a trading system includes topics such as backtesting, optimizing, walk-forward testing, Monte Carlo testing, and the list goes on. Ways to do it include using a spreadsheet, sure, which can be a bit labor intensive, but it's doable. But easier methods include using specialized software, which can then connect to your broker. But some brokers even include that functionality right within their very own trading software. This topic can be pretty big and involved, and so it's not the point for me to cover it here in this video, but I am working on a masterclass which will go deeper into how to statistically analyze your trading systems in a simple, step-by-step way for beginners so that anyone can answer these questions. What I wanted to emphasize here is that if you've created a set of reasons and rules as to why you are opening and closing your trades, and then you test those rules and you discover that you do have a good probability of success over time, then knowing that in advance is another great way that will ease your stress level when you go into a trade. So problem 4, you're watching your trades too closely. When I first started trading and investing, I found myself watching every blip on the screen, every second of every day after I had entered a trade. And at that time, I wasn't even day trading or doing trading in short time frames. I was like just holding stocks for days, weeks, or months. But once I knew that I was already invested in a trade, I just couldn't help but to watch that little price line fluctuate up and down every moment of the day. It drove me nuts. This was becoming excruciating to me, especially when the stock was, going downward on any given day or hour. I couldn't focus on my real work or anything else for that matter. And it just added another layer of stress and worry about my investments when in reality, those were all just normal ebbs and flows that happen in the market. The solution for me was to use automation to place trades that manage themselves. The solution to this came from more advice that was given to me by a trading mentor that I used to know, and that was to always use orders that will manage my trade automatically without me having to be there. For example, most brokers and trading software have special functions in them which will automatically close your trade if you hit certain profit targets or if other conditions apply that you've set. So in this way, when you enter a trade, the software is going to take over for you and it'll obey the directions that you've given to it. And depending on the software and the broker that you use, there can be a huge amount of directions and various options that can be handled so that you don't have to think about it. And most importantly, you don't even have to watch it. This was a huge stress reliever, as I was the kind of person who just couldn't tear myself away from the screen after I had entered a trade. I mean, the more closely I watched, the more hypnotized I became and the more stressed out I was. But these days, when I enter a trade of some kind, I'm able to let my software take over and I can get up and I can leave and I can go to work or I can go to the gym or just go take a walk and not worry about it anymore because it's no longer right in my face. I already know what the outcomes are going to be, either good or bad. And since I've already done my testing and I have my trading plan in place, I'm already comfortable with either result. No more staring hypnotically into the screen for me. I place my trade, I step away, and I do something else that brings me joy in life. My 5th tip for reducing stress and anxiety in trading is that you need to accept the fact that no matter how well you do your homework, at the end of the day, the market is going to do what the market wants to do. You have no control at that point whatsoever. You can define a trading account size that's reasonable for you. You can develop a thorough and detailed trading plan that outlines all of your rules. You can test those rules and your systems, and you can get good probability analysis. You can place your trade and let your software or broker automatically handle it and step away. But after all of that, you still have no control of how the market will respond and move. Have you ever gone bowling and noticed sometimes that when you roll the ball down the lane, you find yourself moving your hips and waving your arms and yelling and dancing like Elaine from Seinfeld, all in an attempt to influence how that ball is now rolling? But the reality is that you've done the best you could do up until that point when you release the ball. After that, the forces of physics take over and that ball is going to do what it's going to do no matter how frenetically you agitate back on the line. Trading and investing is the same way. In order to achieve some level of peace and contentment, you've got to understand that at that point it's out of your control. What happens is not a reflection of your personal character or your competency or your self-worth or whatever. The market is completely indifferent. Even though at times it does feel like it's watching us personally and purposefully making moves against us, it just doesn't care. On any given day, casinos know and they understand that no matter how well their probability analysis is, they can't completely control the randomness of the action. All they know is if they are patient and they wait long enough, their odds will pay off. And none of this means that you shouldn't do your homework in advance, because once you do, you need to find some peace knowing that you have no control. And worrying and stressing is only something that tricks you into believing that you do. All right, so I hope I was able to help you just a little bit about some ideas for reducing stress and worry during your trading. In order for them to work, though, you really need to put them into practice. I've even made sticky notes that remind me of these things, and I keep them stuck right on my trading computer. So, question of the day: what thing about trading and investing causes you to struggle with worry and anxiety? And what have you done that's helped you in that regard? Please share your comments below, because someone else here may have the same issue and they would really benefit from, hearing your story. And as a reminder, this channel isn't just about me, it's all about you, the Joyful Trader community. And so I want us all to engage with each other and share in our collective experiences by posting down below in the comments. I really hope to inspire you to want to learn more, take control of your own investments and savings, and grow your account to build a secure future. So once again, please hit the subscribe button down below. Give this video a like if you found it to be really useful, and then ring the notification bell so that you can stay on top of all the new updates. And until next time, this is Dan saying, never stop learning stuff. See ya.